Well, it looks like Germany's economy is beginning to turn around. The ZEW indicator of current conditions rose to 3.3 in November from 3.2 in the previous month. This measure of German economic confidence has improved for the first time in nearly a year. Joining me to discuss this data from Europe's largest economy is Joshua Mahony, research analyst with Alpari UK. Joshua, thanks once again for joining me. So let's begin with a statement from ZEW President Professor Clemens Fuest. He said after the data release, the recent growth figures for the euro area suggest that the economy is stabilising, which contributed to the indicator's increase. However, the economic environment remains fragile, not least due to ongoing geopolitical tensions. Now, Joshua, would you agree? Is geopolitical tensions the main reason for slow recovery?
I would say so. In terms of what we've seen recently, that we've seen a topping off in terms of the growth levels within the Eurozone. That, I think, a lot of that is to do with what's happening in Russia, especially within Germany. We've seen that weakening, especially in Germany, but not necessarily just in Germany, but across the Eurozone. But I guess when you look across the Eurozone as a whole, we've seen a lot of weakness for a long period of time, and that's not really showing any signs of slowing down at the moment. Germany previously was one of the only economies that actually kind of propped up the Eurozone and managed to push it through. When we've got a weak Germany, it's no surprise that actually, the rest of the Eurozone is weak as well. I mean, looking across Germany over the last 3 years, we've actually seen 1 quarter of negative growth per year for the last 3 years. So that shows that it's not necessarily just geopolitical factors that are playing into this whole issue, and shows that they've actually been having a really bad time of it over the last few years, and that is prior to this whole thing in Russia actually beginning. That comes from a number of different things: lack of investment, transitions from austerity-based policies across the Eurozone, where they're trying to actually move more towards investment and away from actually trying to raise the amount of capital they have within each of the governments and try and write off some of the debt that they have there. And of course, poor demand because of the fact the Eurozone isn't particularly performing as well, and a lot of its trade partners aren't either. Looking across at the Eurozone as a whole, it's not necessarily too much doom and gloom in terms of the trend, because we're still at we're only 0.1% off a 2.5-year high. So, unfortunately, that high is actually not particularly that high, and it's at 0.8. So, I think that what the geopolitical factors have done is essentially temper some of the strength that could have been coming into the region. But I think, all in all, we had weakness within the region before the geopolitical factors came in.
Now, the ECB has implemented unprecedented stimulus measures to bolster the region's recovery and has pledged more if needed. Do you think the German economy can pick up momentum anytime soon?
So far, it doesn't look like it. They've been gradually implementing measure after measure within the ECB. Everyone seems to be waiting for the QE policy that hopefully could come at some point, but at the moment, it doesn't seem like that's going to be having too much of an impact. I think, especially in Germany, I think what's likely to have the impact is the performance and the demand for their goods globally and within their major trade partners. And I don't think that's really shown much sign of picking up at the moment.
Finally, let's look to the euro. Has the result had any effect on the euro dollar?
Marginally, we have seen some movement towards the upside, but it's quite difficult when you've got a trade where everyone seems to think that it's going to go in a certain direction. I guess the question with the Eurozone and within the euro is, who's going to be more dovish going forward? And it seems like the ECB are going to be more dovish because they're in the worst state of any of the major economies, bar Japan at the moment. And so as we go forward, yesterday we did hear from Mario Draghi, and he was mentioning the potential purchase of sovereign bonds down the line as one of these unconventional measures that we've been hearing about for many months now. So it seems like it's not necessarily stopped here in terms of the dovishness of the ECB, and the only thing that could really see a bit of upside from a fundamental standpoint is if we see continued movement towards the downside in CPI and inflation readings across in the UK and the US that might, especially when we're looking at euro dollar, if we did see the US inflation move significantly towards the downside, then that would likely push the time that people are expecting interest rates to rise from the Fed, and then that might see some sort of reprieve in the movement towards the downside in the euro dollar. But I was taking a look at the chart, and it really strikes me at how much we've seen towards the downside and how little we've seen in terms of retracements or strength within the euro dollar. And within the period from May to now, we've actually seen 70% of the weeks have actually ended lower than they began. So around about 2/3 of the weeks nowadays are actually towards the downside, and I don't think that that's really showing much sign of slowing down at the moment, irrespective of the odd positive number.
Thanks, Joshua. As usual, it's been great to speak with you. That's all from me for now, but remember, the Dukascopy TV website is regularly updated, so do stay tuned.